Hi, welcome to Market Flow. I want to do a quick analysis on Clover, ticker symbol CLOV. I want to share with you what this company is, the future. I want to show you at the end who is investing and why this is a buy and a hold. So stick around. There's a lot of good news for Clover, and I am currently a shareholder. Right now, current price is $8.62. Great parts. It's about 50% from all-time highs. What does this mean? Well, if you buy right now and this stock gets back to all-time highs, you're going to double your money. So risk to reward is minimum in my opinion, and that's why I'm buying and holding right now. Now current supports technically is 822 and 790, and then current resistance right now is 1175, maybe a little bit about 1066. The one that I think we're gonna have a little bit harder time is 1320. But again, this is a great buying opportunity. We're still holding the uptrend trend line right here, and I want to review real quick. Clover is a healthcare insurance provider, but beyond that, their secret sauce, it's a software that gathers data from specialists, from EHR, from pharmacy, from lab, from everyone who is interacting with the patient in a way that they can use machine learning, and then eventually gave some clues or actionable data to the doctor or whoever is taking care of this patient, so they can prevent expensive surgeries or treatments. So early on they can diagnose chronic disease instead of waiting for them to happen. These are some of the most recurrent and expensive costs in older patients, and using this program, it allows them to reduce the cost. And therefore, if they can reduce the cost of what a patient is going to be, then they can reduce their premium, making them a lot more competitive in the market. And that is one of the reasons why Clover health insurance, it's growing quite a bit. Their prices are very competitive. They're using technology at their best. Now, one of the ways that you can think about it is like autonomous assistance for cars, autonomous driving. It's the same thing, but for the healthcare providers. Think about it. The cars gather data with all these sensors around it. It has satellites. It makes better decisions than humans, and it's going to be the future. It's going to replace the driver. Where this type of assistant, it's going to be the same thing. It gathers data from all sorts of healthcare specialists, and then eventually it can diagnose and give clues to the doctors better than anyone else. So this is another program that they're doing right now, the telehealth. I'm not going to talk about it, but it is a good add-on to their software. With Clover Assistant, they can get diagnosed early on chronic disease, and then eventually they're gonna be a lot happier. They're gonna have longer lives because they don't die, and therefore Clover gets to growth and get more revenue. So it's a win-win, and doctors have shown positive feedback on this software. Eventually this software can become the standard of the healthcare industry, and then doctors are going to pay sort of a premium because they're gathering data from all over the clients, all over the state. And once they gather all this data, they know exactly how to treat a patient, which type of treatments have better performance and better outcome. So doctors are going to be very happy with this software. So that's why this is a technology company. It's not only a healthcare provider. Yes, the healthcare, they're gonna be the most competitive healthcare company out there because they have this software that allows them to beat the premium of the competitors. The growth is outstanding. They have growth 40 to 30%, but they're currently only over a few states. This is 2019, so right now they have 34 counties, but by 2030 they are expected to be all over America and have a revenue about $25 billion. So if we look back about what their currently revenue is, which is $690 million, and you compare it to what their revenue is going to be in 10 years from now, you can see that this is a huge growth. Right now the short float is 35. It used to be 20%. What does this mean? Well, when the short sellers saw that the stock was coming up pretty high right here, they decided to short it again. Q1 2021, it shows a lot of institutions that are buying, and I found 0 of them selling. Everyone is building a position on Clover. No one wants to miss out on the future of healthcare, software, technology, and insurance. And of course, some of the biggest bets right now are coming from more fuel to the fire. Why? Because now this other one is coming from Baillie Gifford. And I know Blackrock invest in a lot of things, but Baillie Gifford, they're one of my best financial institutions to follow. The reason why, if we go here, last year they had a stunning performance of 85%. Last quarter they did a 25%. So this is a company that is outperforming the market by a lot. And what are they holding? They holding Tesla, Amazon, a lot of growth companies, but it's not like what are they holding, but when did they got in? For example, on Tesla, they got in on 2013 at a $42 average price. But the other example is Amazon. Right now, they invested in 2024 at an average price of $167. It's currently sitting at $3,000. Now, this is a no joke institution. They do great research, they invest in growth companies, and they do it early on stage. So as you can see, they did their own research back in the day with Amazon, Tesla. They got in at really good prices. They have held it for many years and it has paid off. So for anyone who is invested in this company, know that there's many institutions, many of them with great performance records, getting in right now on Clover. So things are about to get started. Now I want to share just a little bit about Baillie Gifford and why they are a greater company to be in Clover. One of the main things is the relationships. Yes, they do invest in the future, they invest long term. They have great focus. They see the big picture of what the future is. They're trying to make things right, so they invest in things that are good for the planet and so on. But one of the great things that they do is relationship.
Baillie Gifford don't simply invest in some of the world's greatest growth companies. We strive to build early long-term relationships with the founders to help them better achieve their vision. Because we believe long-term relationships build superior long-term returns for our clients. Baillie Gifford, actual investors.
Why I'm excited that they got into this Clover stock is because they use their experience, their perspective that they have acquired, and then they help and encourage management to be sensible for long-term decisions. They don't care about quarter-to-quarter profits, but ultimately they like to help the founders and the entrepreneurs to be able to get beyond and above vision is. So again, this is something that is really good. They work with Jeff Bezos back in the day when they were investing on Amazon. Baillie Gifford was one of those institutions who helped Amazon grow and show their support all along the journey. Again, this is an amazing institution, financial institution, and like their slogan says, they're actual investors. It says we need to buy into their capital investment strategy, even if it depresses short-term profits. So again, just to do a recap on this video, technically this is a great opportunity to buy. There's a lot of institutions who are buying, and on top of that, you got one of the biggest and best institutions that you recently bought quite a bit, and it's going to help the stock growth in many different ways. And you know, this is all I wanted to share. I hope you get a better perspective of Clover is. If you have a different analysis on what the company is, share it below. If this has helped you, like the video, share it, subscribe. Thank you for watching.